If you're in financial services and you're noticing that it's getting harder to acquire and retain customers, you need to know about Finimize. Finimize creates the world's most engaging finance content for retail investors, and you can now white label it for your platform. Get access to a library of over 20,000 news, analysis, and education pieces written by former Wall Street analysts with the retail investor in mind. Not only does the access via API or manual download mean simple, fast integration to your platform, but features like advanced tagging let you easily personalize it to your customers' portfolios and preferences. With content available in over 29 languages, it's never been easier to supercharge your brand with content that resonates globally. Find out how Finimize can grow your brand or elevate your content at finimize.com/business.
Hello and welcome to Fintech Insider Insights. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. Today, I'm speaking to Martin Sokk, the co-founder and chief executive of the digital investment platform Lightyear. It's really great to have you on the show, Martin. How are you doing?
I'm doing great. Thanks for having me.
Thank you so much for joining us. Well, let's dive straight in, because first of all, you have some news to share with us, I believe.
Yeah, it's extremely exciting time at the moment where we have just granted the full direct authorization from FCA. So effectively what that means is we can really up the game how people in the UK can invest with all the basic stuff like FSCS protection and upcoming ISA, but all the interest environments and all the good investment habits what we have been building for the last couple of years.
There's quite a few abbreviations in there. So the FSCS is the Financial Services Compensation Scheme, which if I understand correctly, means that investors will have up to £85,000 worth of protection for money invested with you that is presumably in cash.
Yes.
Is that correct? That doesn't protect their investments, but it protects cash. Is that correct?
So I think the first thing, maybe even taking a step back from there, the first principle what we are following and effectively regulators asking everybody to follow is that your cash and your investments are yours. Mm-hmm. They are not ours. Mm-hmm. So we can't lend out your money or investments. It's more about that we actually keep them in a segregated account. It's a client money account somewhere. FSCS protection is just an extra scheme when everything goes wrong. So it's kind of last mile. But the first mile is that your money is in a different account. So even in the situation where Lightyear shouldn't exist and one day your money is still there and nobody has a claim for that.
So were you previously regulated by the Financial Conduct Authority in the UK, or were you only regulated in other markets? So
we are regulated in many markets. So we are actually regulated more than 30 markets at the moment.
30.
UK, we weren't directly. So we were working together with one of the companies who are helping us to go into the market. The problem with that is, if you're building an investment product, you want to own your own regulatory environment. So you have to be owner of that, but also owner of the way you send transactions to the market, the way you hold money, the way you actually move assets from one place to another. So if you're building an investment product, in Europe, it's incredibly crucial that you own most of it. Obviously can't own everything. It's big world there, but the closer you are, the better it is. And the better it is for a customer because there's less middleman, means less costs associated with that. Everything gets faster because there is no middleman, you can operate with that. But yeah, regulatory matters as well is that, so regulatory framework is effectively saying how you're going to build a business and there's some restrictions in one way or another. So if you want to build a really good service, you need to go and own that properly so you can build these good services for the customers and take responsibility for that.
So effectively, you started in the UK with a partner,
yes,
and you've now got to the point where you've outgrown the partner. Thank you, partner. Great job. But now we're going to do more of this ourselves.
It's an interesting time. It seems that this year I see more and more investment platforms are actually leaving the UK, mostly because they just can't handle the regulatory overhead. We took another way. like we decided that we're going to double down in the UK. So we had like a simplified license. Now we have a full license or like direct authorization. And this gives us an opportunity to actually build a really, really good product because UK still needs that. There's a massive market, which is mainly underserved at the moment.
So I'm going to sound very unpatriotic here. Why do you think the UK is an attractive market? I mean, you're operating elsewhere in Europe. There are plenty of big countries in Europe. Why is the UK an attractive market?
So UK is still like I would still call UK like as a financial capital of the Europe. It's most of there's so much of the kind of infrastructure side, the way how people are investing. And I think like the average person in the UK has a little bit more understanding and experience of investing as well. So now put that into perspective that UK has actually quite many people. So it's like, yes, Europe together maybe has 500 million people, but like UK has a significant portion of that. So there are not many markets who are in a similar level of that. So if we see UK, there is like 20% of people who invest, means that 80% are not investing. But the problem is that in the rest of the Europe, the situation is much, much more tragic. So I actually came from Hungary, where I think there's like 11% of people are investing. And they're not even so much of the investing. It's more often they're like protecting their value because like inflationary environments and so on. But in the UK, we see that, first of all, there's like 5-something trillion pounds which are invested already into the market. But that's only 20% of the UK people. So now coming back to the question is the UK attractive market? I would say that UK is attractive because the problem is not solved here. So this 20% compared to the US is more than 3 times less. In the US, there's like 50, 60, 65% of people are investing. And I think it comes down to the, as maybe US market or like US government supports people less in that.
Indeed.
Yeah. So people are more forced to go and take care of their financial health and stability. If you're coming into the Europe, the situation is a little bit different, where people expect governments to take care of them in their retirement and whatnot. But the reality is like it's not that beautiful picture in the end of the life. Like I would ask sometimes people that if you would retire today, what would happen in your life? Like think about the kind of pension what you were getting, like the amount of money. And like a lot of people would say that like I would be homeless because my mortgage is higher. So what are you going to do? Like why do you think it's going to be better when you're actually retiring? So taking a step back, I think there's a massive problem that people are not really taking their financial health into their hands. And investing is, like, in my opinion, one of the best ways of doing that. And like obviously, like you need to be smart about it and you should think about risk and long term. But if you're doing that right, I think it's like amazing opportunity for UK.
Yeah, I agree. It's a huge problem right across Europe, and also you're quite right that British investors have been a bit more exposed to the market and have had to take a bit more responsibility for their investments than investors in most other European countries. I think maybe Sweden, Switzerland, a few other countries. So who are the customers you're going after? Because it's all very well to say, hey, only 20% of British people invest today. Some of the other 80% of people don't invest because they just don't have any spare money. Who are the customers you're going after? Are you going after the sort of 20% who are investing already? Are you going after new customers? Who are the customers you're trying to solve for first?
I don't fully agree that people don't have money.
Some don't have money.
Yeah, like a lot of people don't have. But like there's also... there's this magical thing called time. Time often helps you a lot. So I can give you an example. Maybe like a side guest in this topic is I'm a new father. So I have 1-year-old daughter.
Congratulations.
And, thank you. And when she was born, I bought £2,000 worth of SP500. And like why I did that is that there's this magical formula in the world called compound interest, and the time is the main component there. And what does it mean is that in 65 years, what she lives, works, does whatever, and retires, then this £2,000 will compound doing nothing, just being there and getting yield from the markets, gets into million. Yes, the million is a little bit different from that time, but like it's not nothing. It's quite a bit. So this is like mainly to illustrate that even in small amounts of money, what you're investing over a period of time, you actually are getting into pretty interesting position over, like if you're doing it persistently and if you're adding constantly a little bit money.
So who are you trying to reach? Because presumably your typical customer is not a 1-year-old.
Oh yeah, like no, it's not. So this is something just like I think everybody should invest even a small amount. So what we do first is that we focus on people who I don't know how to say it well, but like who actually want to invest. So I don't think that you should be smarter than market. You shouldn't gamble. You shouldn't take unnecessary risk. I have massive personal vendetta against all the CFD providers because I can statistically show you if you're like coming in and trying to beat the market and like day trade every day, you will lose money.
So CFDs are contracts for differences.
So contracts for difference, and like they are coming from the gambling world, and often I see what's happening in the behind there. Like you're getting bad price. There's massive spreads, massive effectively fees involved in various different places there, but also companies often take like positions against their customers, and like this is not investing. This is casino. So you literally can go to their websites and see there's like disclaimer how many of their customers lose money, and like often it's like 70-80% of their customers lose money. Like you have better odds of being in casino. So I want to steer far from it, because if you think about, like we're talking about the bulk of the money today sits in a bank. Like almost every money sits in a bank. Like we can talk about there's some players here and there and they're making waves. Like no non-bank investment platform has made any waves in Europe in any markets. Like even the biggest ones are significantly smaller than like any general bank. So we're talking about banks like are billions and billions of pounds, euros, dollars of assets. We're talking about investment platforms was like single digit something. So that kind of shows that the people who are more conservative, who want to take a long-term view, who are buying ETFs, they are buying like diversified portfolios where you don't have like a lot of risk. Like this is the customer we go after. So what we see right now, ETFs are like by far fastest growing asset on our platform. Everybody's long run. So we can see like 95% of the customers in the last year who started using us are still using us, because they don't go in and gamble and leave, but they buy and hold, and they have a like monthly buy into the ETFs, and like they often think about like big distributed things, so like less risk in a way. So that's our customer. So people who want to grow their wealth over a long period of time.
So I completely agree with everything you're saying about European investors being very conservative, European investors in general tending to put money in the bank, probably keeping more money in cash than makes sense. How do you reach some of those people in particularly in the UK? How are you going about sort of appealing to them and attracting them? Because it's hard enough building a platform, but getting customers to go and use it is probably harder still. How do you go about reaching them? What's the sort of core of your marketing strategy?
You said something really interesting here. You said that people are often putting money into the bank and keeping it in cash.
Some people.
Yeah. A lot of people do that. But there's an interesting phenomenon where so US people buy stocks and Europeans are buying cash or keeping it cash. Means that the yield on the general, like on a society in the US is much higher. Means technically US gets richer and Europe gets poorer.
Yeah, so, you can kind of see that over decades, can't you?
It's pretty crazy to think about, and it's like systematic. But how do we reach to these people? So like the way we grow comes from product-led growth. And the product-led growth is that we have excessive understanding or ambition to understand every market what customer wants. And if you figure out like the actual need what customer wants, we build something, we answer that need, and then we follow CSAT or MPS, like effectively trying to figure out what customers think about service. And this is an interesting correlation that if you're getting the satisfaction number up pretty high, so it means that you have a specific customer with specific needs who work for us well. And if you get their satisfaction up, they go out and tell to their friends.
Are you using Net Promoter Score or customer satisfaction or both?
We are using CSAT and Net Promoter Score, both of them. So it's a little bit different angles, a little bit different view, but like maybe an example here with the Net Promoter Score is that there is you ask customers like how likely you are to support your product to the other friends, and there is scale from 0 to 10, and 9 and 10 are like the promoters, 7 and 8 are like don't matter, and then everything below that, 6 and below, are detractors, so they will drag people away. They're not happy with your product. The difference from 7 to 9, so if you're able to take a customer and move it from 7 to 9, is 3x in virality. So means that
really,
yes. So the people, if you're satisfying them, like getting from like meh to okay, it's 3x more customers what are coming in. So this is our main.
I like
focus.
the way you describe a 9 as okay. That's
yeah, it's pretty amazing actually if you think about it. And like it's not that crazy. You don't need to listen, build everything, but like you need to figure out what are like the actual key problems. And these key problems sometimes change. So like when we start building this business, like interest wasn't a thing. Now it's like everything, and like so it changes constantly. But like if you figure them out, then you're like effectively building what customers want right now, then you're able to grow. So this is the way to think about it.
And are you feeding or planning to sort of feed or accelerate that virality? Because if you look at Monzo, Revolut, and so on, I mean, Revolut pings me every day saying recommend a friend and you'll get 50 pounds, whatever. Are you doing that kind of member get member type thing yet, or are you relying on just the goodwill of your customers to tell?
So we do
friends?
that a little bit, but like we are a bit careful of that because we have been trying to figure out like if you're doing like for example referrals, what you're mentioning here is if you're making referrals for everyone, then it might not serve the purpose. So we found out that if we find really good customers who are in our platform who has the current product market fit, and then we go to these customers and it's like, hey, you have product market fit, let's I'll give you an opportunity to refer all the friends and whatnot. So there is like that element. So if these people bring new friends in, they are really, really good customers and everything gets much simpler. If you bring everybody in, then there's a lot of people who are like fishing off like referral bonuses and whatnot. The problem with that is that you might get numbers up, you get like a lot of customers, but A, doesn't really matter in like actual world. But B, it might be also confusing for you because you get people who are incentives are not aligned with you. And now I'm going to listen to customers, and like we discussed, like we really want to listen to these customers. And if they're not actual customers, then you get the false information. So we're actually rather protective around that. Like, who do we want to work with? And because we're really, really careful making sure that we're able to answer actual customer problems instead of just like growing numbers in one way or another.
That's really, really interesting because we spoke to your head of design back in September about how much sort of attention to detail you put into things like the onboarding process and so on. It's really interesting to hear you echoing that same thing. So how important is the sort of the user experience and design to Lightyear?
I think it's extremely important, but even more than people think. So if I would ask, or like I can go right now, open our CSAT Slack channel, and like by far number one comment when people give us maximum score is, oh, this amazing design. So like simplicity and everything is like amazing there. So Kish, who's our head of design, is like not just a good visual designer, but I think more kind of product designer. Because if you take, like think about like, have you seen ever like Wall Street apps or like any kind of trading app or whatnot? There's information overload and to the maximum extent. So like how do they take all this necessary stuff and package that in a way that people will understand it really, really well? And like this is not just how do you do it visually, but like all these user interactions in one way or another and what information to show right now. But if you want to see more, then you can go deep. So we have some rather complex stuff about data, but also, or you can listen into annual accounts from the CEOs of all the companies on our platform. But it's not in the front and center, but you can, if you want to, you can go and find them. But there is another angle of it. What's I think people often forget, it's also user design, user experience, is the way how you build a product and how you build operations. There's some examples around that. Like if you think about technically and you go to the bank and you want to buy an Apple share, then there's a lot of things what will happen behind the scenes what customers shouldn't see, in my opinion. So for example, I'm going to buy an apple, then bank will tell me, it's like, cool, you executed the order, now it settles. So it takes 2 days to settle. So in like if you did it in Monday, then in like Wednesday you will get your Apple share. And now you want to sell that Apple. It takes another 2 days to get into cash because it settles. So there's like this process, execution, clearing, and settlement behind it, and it takes time. And like yes, like this is how financial infrastructure works. But like, sorry, but it's stupid. Like I wanted to buy an Apple. I don't really care if it settles or not. So like what if you're looking at this process is over, then you can see that you don't need to do a full settlement every single share, but you can do a net settlement. It means that if you're buying an Apple and somebody's selling an Apple, you can net all these things out. So effectively, we know that the money comes in. Like we already have your money. Like we don't need to burden you with all the processes, what like technology is there. So we are just saying like you have an Apple, and if you want to sell it, you can sell it right away. So instead of the week, you can do it in like 5 seconds. And in these 5 seconds, like technically, yes, there's a lot of stuff is happening, but you don't need to see that. And like this is, I think, like just one example of like all these kind of elements what will make a good user experience. You don't. I think FX or like foreign exchange, if you need to convert money, is another one. So like why? Like often what I see is that you go and try to buy something, and they're like, you don't have money. I was like, I have money. It's in different currency. Like, why do I need to go in another tab and convert the money and like figure out the amount? Like, can't this happen automatically behind the scenes?
Just do it for me.
Yeah. And like, I'm coming from TransferWise, so like, or Wise these days. And we spent a lot of effort and trying to figure out like how this kind of FX world works. And like, there's a lot of heavy lifting, which I don't think customers should see. But if you do it well, then this matters a lot because it's seamless.
I love this. All right, so let's take a quick break here, and then we'll come back and continue the conversation with looking at what the future holds for Lightyear.
Proving trust is more important than ever, especially when it comes to your security program. Vanta helps centralize program requirements and automate evidence collection for frameworks like SOC 2, ISO 27001, and more, so you save time and money and build customer trust. And with Vanta, you get continuous visibility into the state of your controls. Join more than 8,000 global companies like Flow Health, Synthesia, and Alica Bank who trust Vanta to manage risk and prove security in real time. Now that's a new way to GRC. Get $1,000 off Vanta when you go to vanta.com/insider. That's vanta.com/insider for $1,000 off.
Welcome back to Fintech Insider Insights, where I'm talking to the CEO of Lightyear, Martin Sokk. Before the break, we discussed how Lightyear is carving out its place in the UK investment market. Now we're going to look at plans for the future and how Lightyear fits into a relatively crowded and evolving sector. So you've launched in the UK, you're launching in a number of other European markets. Can you tell us a little bit about some of the other markets you're in, maybe some of the challenges you've had in moving into different markets? I mean, we talked about Europe as a whole, but of course, Europe is not homogenous. What have been some of the challenges you've encountered as you've been trying to grow into different markets?
So I'm really optimistic on Europe. It seems that people tend to think like, oh, you build something and then you go to the US and then you're going to be successful. Europe is bigger. Europe has more people than US. We actually have a significant amount of capital already in use or invested and various different things. There's really, really like good things are happening in Europe. The problem with Europe is that everybody wants to be their own. So we have so many languages, countries, regulatory environments, currencies. Every country has a stock exchange. In Germany, every city has a stock exchange, joking a little bit there. There's a lot of infrastructure, what America has figured out, Europe hasn't. And then even if you, like for us, we have effectively multiple regulatory regimes. So one in the UK, another in Europe. Europe, we're operating in 21 markets at the moment. But all these 21 markets have different way how you work with the customers. So in France, can't really sell to the customer if you're not speaking French. In Portugal, you have a different way how do you need to work with the marketing, because some things are illegal and you have to do in a particular way there. Every single market has their own way. So there's like this technical kind of regulatory aspect and like the obvious cultural things, but there's so many small things, starting from the way people invest. So in the UK, people are looking to put their money to work. So we have like 20% of the people who see like, oh, I'll have some money. I'm looking into various different tax advantage solutions. I'll want to get interest at the moment. I see capital markets are actually maybe are starting to get into really healthy state, so I'm going to invest there. But if you're going, for example, in Hungary, Hungarians are they have had massive inflationary environment. So means that their like inflation has been like more than like 20%. So their question is like, ooh, if I don't do anything today, then my money is worth 20% less next year. So what I need to do? So there's like massive government programs. But what we see a lot as well is that people, take their forints and get interest. So maintain the buying power of the cash. But also they convert, for example, into pounds. And now they're getting 5% interest out of the pounds. So they have like two protections. One is, they get the interest, they get something out of their money, but also pound is so much stronger currency. So they are finding ways how to invest or protect their assets. And this happens in every single market, like in one shape or form. People also tend to invest in stuff what they understand. And the stuff what you understand is stuff what's around you. So if you're in the UK, you see stuff around you, like you go to Tesco maybe and like buy stuff there. But you see also the US stuff. So US is so visible. There's biggest capital markets in the world. They're really good at marketing in many ways. But you go less Norway or Poland. So it's like not a lot.
British people just don't see what's going on in Poland or Norway. Right.
But Lithuanians invest in Lithuanian market where maybe none of the Germans ever invest. So they invest in Lithuanian market, but also in the US market, but also in the UK market. So in that sense, like to build this kind of really good service, you need to build quite a lot of layers and frameworks. It's not only technical, but you also need to understand how people are thinking. And I think that's rather crucial where most of the fintechs fail. So there's only rare amount of fintechs who have managed to be successful around Europe. So maybe Wise and Revolut have been like one of the kind of really good kind of examples of that, but most have failed. So a lot of fintechs have tried to come from US to Europe. So they think about, UK is like 51st state of the US. It's like really far from truth. Yeah. And often they failed. So Robinhood has tried to come here so many times, and they're still failing effectively. So yes, they're here, but like it's not really a proper investment solution.
Robinhood's business model doesn't work in there. I mean, it's
illegal in Europe.
Yeah, it's illegal, exactly.
Yeah. So they have to do some really weird schemes.
Yeah.
So there's a business model problem. There is also the problem that Americans don't really recognize pound, so that currency doesn't exist. So if you think about the US products, then like, I'll convert your pounds directly to dollar and you use it. But like, I'm living in the UK. I want to use pounds. Like, I don't want to use dollars. But that happens also from UK to Europe and Germans to the UK. So there's so many companies from Europe have tried to come to the UK and failed. And same from the other way around. And I think the main thing why they fail is that they're arrogant. They're arrogant because they think that they have figured it out in their own market, and now...
So they think it's going to be easy to go into another market. But as you say,
but I know
Portugal or Lithuania or Norway, each European country is different, and people behave in slightly different ways, and there's slightly different rules, and each of those things can trip you up.
Yeah, and none of them look at the other market and say like, I really want to behave exactly like that market. That's not true. Like people want to behave like they're going to behave in their own market. And like many things, they can't really even behave differently. Like taxes are like every country has their own tax. And like while I might like love or hate UK tax system, but Lithuanians don't care about that at all.
So in a sense, what you're describing is actually one of the biggest challenges facing European fintech as a whole, that it's really hard to scale beyond one country. And there are a few examples, as firms like Revolut and N26 and Wise, as you said, that have managed to scale beyond more than one country. But actually, it's incredibly difficult. And that perhaps is one of the main reasons why Europe has produced perhaps fewer fintech champions of the same scale. Because if you get it right in California, it's very easy to go to New York, it's very easy to go to Ohio or Idaho or wherever. A bit harder to go to Canada, a lot harder to go to Canada. And that's why you don't see a lot of those American fintechs going to Canada. But in Europe, it's really, really tough to get from one country to another. And there's similarities between the countries. But there's also, as you say, all those differences. I want to dig in on that point you just made about the currencies there. You're a bit rude about the Americans not recognizing the pound, but I get your point. Lightyear, you make a big deal about having multiple currencies on the Lightyear platform. And as you said, you previously worked at TransferWise, now Wise. How important is being able to handle multiple currencies on the platform to investors? And how much does that vary across Europe?
If you start looking into investment market, then you realize that people invest globally. And then next step is...
Do they, or do they mostly just invest in their home country and the States?
There is a lot of that, but there's also investments in China, quite a lot that happens. Obviously, the Chinese market is more difficult, there's some ADR questions around that, whatnot. And then there's some neighboring stuff. So we see so UK is still investing in Germany. Mm-hmm. Germany invests in the UK, in the US. Estonians invest in Norway for whatever reason. So there's some mix around that. So that comes to this kind of weird situation where even if you take maybe three biggest markets, you right away have three currencies. Mm-hmm. And it turns out that a lot of companies are in different currencies and you want to have a position. So what we see quite a bit is that a lot of people want to have a position. So if I'm buying an apple, I want to buy an apple in dollars. Because if I'm going to buy it in pounds or euros, it doesn't represent the actual apple. So there's a lot of that. But there's also maybe a lot of people who are starting investing and there's I don't know anything. So I want to invest only in a local market currency. So I want to see everything in my own currency because I don't really get dollar, for example. So what we have done is that we have tried to cater both of these needs. So first of all, we have multi-currency. So we have right now dollar, pound, euro, Hungarian forint, and adding other currencies in Europe as well.
You've got 4 currently.
So 4 at the moment, yes. And if you're buying, for example, ETFs, then we try to put these ETFs in all 3 currencies, the biggest ones. So Europeans can buy it in dollars or euros, and UK people can buy it in pounds or dollars. So you can decide what currency you want to be exposed there. So there's quite a lot of kind of nuances around FX. And often these are handled rather badly. So they are... I think the typical thing, again, I'll put my TransferWise or Wise hat on and people lie, what's the rate? So they're oh yeah, we don't charge you anything. It's actually it's 1 to 5% hidden in the exchange rate. And it's really hard to actually calculate sometimes. We spend a lot of time in Wise to help people to understand where the fees are coming in. And it's not dissimilar in the investment platforms. There's it's an easy way to make money. But I think it goes directly into the bucket, you're not transparent, you don't really understand what's going on. We literally right now, I think we're going to launch in any day right now, a full foreign currency impact into your portfolio as well. So whatever you buy, you see I bought Apple in dollars and I maybe gained a little bit, but maybe the dollar got weaker. So you get an understanding of that.
Okay,
as
so you're
well.
going to show me not only my portfolio performance, but you're going to show me the currency effect of the investments that I held in euros, the investments I held in pounds. How much of that was because the German economy, German stocks doing really well, and how much was it because the pound crashed or whatever
But
happened?
It's important. In the end, it's hidden fee in many ways. So we'll try to get really transparent what's happening there and give you the opportunity to invest in a currency what's important for you.
Really, really interesting. Another area I would love to dive into is businesses, because you're relatively unusual for predominantly retail proposition in that you also have a proposition for businesses where you're saying to businesses, hey, invest your spare cash. Why do you do that? And is it working?
It's working incredibly well. We have about 4,000 businesses at the moment who are using our service. But I think it happened a little bit accidentally. What happened was humans started using our product. and then it turns out these humans are often running businesses. And what happened was they were like, oh, I get like interest in my personal account, but like I have money in my business account. Like, why should I don't get the interest there? And they went to the bank and they don't get any interest there. So it's like, can you onboard my business as well? And we're like, start getting quite a lot of that. So it's like, okay, fine, like we'll look into that. And we start slowly onboarding. And like this has now gotten into the position that like we have, I think right now about 10, 11 markets open. And like end of the quarter, we have every single European market business onboarding open. And like we have quite like selection of the businesses. So like many first businesses were like startups, like, oh, I raised 10 million, but like I need that for like next couple of years. So I'll put 5 million earning interest at the moment.
Okay, so some of these 4,000 businesses are investing substantial amounts.
Oh yeah. So like that's exactly like you invest 5 million and this 5 million earns you quite a significant yield.
Because you need quite a lot of retail customers to get 5 million, right?
Yeah. But like I think both are important because like in the end, like is it financial help for a retail person or is it business? It doesn't really matter. Like both we're fighting for our survival. And what happens is that I think right now effectively every million gets you enough yield to hire one person. So if you have like 5 million invested, then like obviously like you can't hire like the top of the world most expensive people, but you're able to hire people out of that. And last month I met somebody who's like VC, who's like introducing various different companies to us. And they were like, oh yeah, like we have one startup who is earning more from the yield that they're burning right now. So they're actually cash flow positive, which maybe is not the best use for VC money, but like you do whatever you need to do, like to figure out their product. And I think it's pretty cool. Like otherwise the money would like be gone via inflation and everything else. And now it works for you. But yeah, like it's not only startups. So we have one of really cool ones, like you have a potato farmers, they have seasonal business, and then at one point they have lots of cash and other times we don't. So there's like, oh, I'll put my money to work while I have the cash, and when I need it, I'll withdraw it and like put that into use. So it's like quite many people who see kind of benefit out of like, we're not focusing on like enterprises. We're focusing on like small and medium businesses and a lot of freelancers and these kind of people.
I love the potato farmer example because it's very easy, to sit in sort of central London and sort of assume that only certain groups of people are really embracing digital. Yeah. And it's just completely false.
Oh, don't get me wrong. Like, I think like if you want to do an amazing episode, like go and find like various farmers. Like the farmers are often more sophisticated investors than like some bankers here because they need to think into like futures and like all the contracts around that. That's like just pretty cool, actually.
Indeed. So looking ahead, the UK, which was the sort of focus of our conversation today, is it's a crowded market, right? You've got lots of established players like Hargreaves Lansdown. You've got previous generations of fintechs like sort of Nutmeg. You've got Free Trade, etc. There's plenty of other firms competing for the same group of investors. How are you going to sort of scale Lightyear? What is it? What's your story about why is Lightyear different, better for some customers, all customers? How are you going to kind of scale Lightyear? What's the story that's going to persuade more and more people to come to you rather than going to some of the various other firms that they could try?
So let's establish first like who's the competitor and who's the customer. Like none of the newcomers has managed to do anything. So Hargreaves Lansdown, from top of my head, has like 100 and something 20 billion customer assets on their platform. That's like mediocre bank in that sense. There's like bigger banks here. If you take like the biggest startup, they are a couple of orders magnitude smaller. So it's like you can add all the newcomers together and you're still like half of the hard use land's done. So the market hasn't been disrupted yet. So the money is in a bank. So if you take the bank as a competitor, then what these people often need, they need trust. So it means that they understand that everything is, you trust your finances with this company. So we spend a lot of time making sure, finding our partners, all the regulatory angles, the way we set up everything in a way that we have show customers that this makes sense. But also like we don't go into get rich quick schemes. We try to focus on a long-term view, and this long-term view, like again, brings in the customers who want to be in the long run. So what we offer at the moment is that like all the stuff that we already mentioned, that you have good protections. We're launching an ISA. It's going to be market-leading cash ISA and stock and shares ISA with the best possible price. But also like there's a lot of small things. It's like we don't charge for an ISA every month in a way and so on. And like we try to figure out like how do you get effectively the fees are not going to eat into your performance and what's going to make sense, but also what's going to make sense for us to build these products, because we see that the way we're going to build it, like often when we charge in the right way, it can be like a win-win situation. So every single thing what we're building is kind of goes through this kind of mantras, like what's the good for the customer and the company. Interest. So right now in the last year or so, people are massively asking like how to put the money work in the proper way. The interest offering what we have is, again, it's not random. Like we went to the biggest fund in the world, BlackRock. We got them working with us on extremely good position. So I can give you a weird example where we are right now is that if you are a startup or whoever company and you have 100 million cash, so what's going to happen is that you have all these big banks and everybody reaching out and like, oh, I'll give you and some offering and some interest. So I actually know personally 2 companies at the moment who have put 100 million cash, earning yield in these positions, and they're getting worse rate than our customers who put 10 euros in. So
that's nonsense.
It's insane. So like we found a way how to take like these really big institutional products from the best possible players in the world, like BlackRock, and expose these to whoever you are. Are you just a person who wants to invest 10 euros every month, or you're a potato farmer somewhere, or you're somebody else, or you want to put like 5 million. So you get the same yield. It doesn't really matter. So this is our point, is that we don't really care if you are a massive business or a small player. We'll give you the institutional product, the cheapest possible price and the best possible user experience. And like this is often the winning factor. And like on the top of it, there is like if you zoom out a little bit, every market has basics. So people care about localization. So you have currencies, instruments, local instruments, taxation questions, and you have the way I want to invest. And Germans have one, UK has another, Estonians have a third. But on the top of that, you need to have really good interest offering, really good for FX offering, really good way to buy stocks, but it has to be also simple and good design and user experience around it. So this combination has worked really, really well at the moment.
Martin, it's been an absolute pleasure talking to you. We're pretty much out of time. I've got one lightning quick question for you. The name Lightyear, there's a lot of Toy Story fans in the world. There's a lot of Toy Story fans probably listening to this. Is there any connect? Where did the name come from? Were you inspired by Buzz Lightyear, or was it just a word that wasn't a brand that you just thought, hey, that's a good brand?
It's actually quite maybe boring answer in some sense. We when we first started this business, me and Mikkel sitting down, and then I realized that I was paying like £4,000 to make investments. And over this time, actually, like it's weird, like a lot of people who have joined their company, they're like downloading their statements and they see, oh, I'm paying also like ridiculous amount of money, but they don't realize before they actually start looking fees and everything in the statement. So like that was the element where we are like it has to be like light years better. And like, it's like, oh yeah, it's like, okay, it's a massive number. So like, this is something what needs to happen. Like the investment world is like, I think in many ways so broken that there's so many hidden fees and like hostile services that it has to be much, much better. And like, I think light year is a good number to illustrate that.
Got it. So you're building something that's light years better for investors across Europe. Martin, thank you so much for your time today. It's been an absolute pleasure talking to you. I wish you and your team the best of luck. It's very, very exciting what you're doing. Thank you for being so open about all your work.
Thank you for inviting me.
It's a pleasure. Well, that wraps up today's discussion. A huge thank you to our special guest today, Martin. Thank you so much for joining me. Where can people connect and find out more about you, and where can people find out more about Lightyear?
Easiest way is to find us from our website, lightyear.com. And you can find me on LinkedIn, or you can just send me an email, martin@lightyear.com.
And you can find me, Benjamin Ensor, on LinkedIn. So thank you so much for listening. If you like what you've heard, please do follow our podcast. Do leave us a review. Let us know what you'd like to hear about in future shows. If you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email us at podcasts@11fs.com. Thank you so much for listening. Goodbye.
Proving trust is more important than ever, especially when it comes to your security program. Vanta helps centralize program requirements and automate evidence collection for frameworks like SOC 2, ISO 27001, and more, so you save time and money and build customer trust. And with Vanta, you get continuous visibility into the state of your controls. Join more than 8,000 global companies like Flow Health, Synthesia, and Alica Bank, who trust Vanta to manage risk and prove security in real time. Now that's a new way to GRC. Get $1,000 off Vanta when you go to vanta.com/insider. That's vanta.com/insider for $1,000 off.